Hey traders, and welcome back to another video here on Sunday, which I do every week, going over some trade setups and ideas for the week ahead. A lot of stuff to cover here, so I'm going to go ahead and jump right into it. And the thing I want to bring you guys' attention to is look at the dollar. The dollar looks, for the first time in a while, very, very strong. And in this video, what you'll notice is a lot of my focus here is going to be revolving around the US dollar, as I've noticed some interesting things that are setting up, and I'm going to show them to you here in this video. As we get into it, make sure to hit the thumbs up button, help out the channel. I really do appreciate it. And with that said, let's jump in. Okay, so the dollar broke out of a key level of resistance recently. And last week, we had a lot of data come out. A lot of data that actually really helped to push the dollar higher. We had CPI, of course, the big one. We had retail sales, and we also had PPI. Now, these two are a measurement of inflation, and both of them pointed towards a stronger than expected number in terms of the economic growth, which is, of course, you would think, hey, that's good. So, what's wrong with that? Well, nothing's really wrong with it, but except for the fact that the Fed is watching these things. The Fed is saying, hey, what's going on with these inflation numbers? And when these inflation numbers come out red hot like they did on in the previous week, the reason that brings red flags to the market is because that means that the Federal Reserve may need to stay hawkish longer. If you don't know what I mean by hawkish, what I mean is that they're going to need to raise interest rates. And with raising interest rates, one thing you should always sort of remember in 90% of the time, higher interest rates make a currency more attractive. And so that's why that data led into a strong push for the dollar going into this week or this past week. And going into this week, why I am looking to actually pick the dollar up on a pullback. You can see prices pulling back to a key zone that I've got marked up on the chart where we saw technically a lot of rejection here, 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 and here. So as price comes back into this zone, I am looking for a chance to possibly get long the dollar, and I have a couple trades that I want to go through with you guys on that. Now, not only am I just from a fundamental perspective, I like the dollar from sort of just that analysis that I did, it's also showing up all over the place on the Edge Finder. And the Edge Finder is our economic data scanner. We also scan for fundamentals. We scan for sentiment, like commitment of traders data, retail sentiment, etc. But I want to really direct you guys to this area of the screen right here. This is our economic output. And when we talk fundamentals, which we talk about very often on the channel, we see that the dollar is getting a lot of bullish readings in a lot of places. In fact, take a look down here where we have really strong number of USD crosses, euro dollar bearish, NZDUSD, GBPUSD, AUDUSD, all of these getting strong sells, and all of them in almost all circumstances are getting bearish readings in the economic output department. Now, what that means is that they're getting bearish readings because the dollar is the more attractive of the pairs. And again, we're going to dive into some of these and I'll show you a chart for each one. Euro USD is probably a good place to start. Let's talk about the euro and pull it up on the chart. You can see here, this is the 4-hour view. Price is pulling back after that really impressive downward push this past week. We're looking at a 4-hour chart. And when I start marking up this, it's very clear to see that overall the trend has been, and still in my view, is to the downtrend, to the downside. And when I start looking at this thing, what I'll notice is that you had this big extreme push off of Friday, but it's still in a bearish overall trend. So as we pull back in that trend, a level comes to mind that I want to show you guys, this 50% level. This 50% level is pretty close to getting hit. We have key levels of resistance on each side of the, you had the bulls hold it and then the bears took it over, right? So a retest of that zone to me is a normal pullback and should, if the sellers are strong enough, should continue to hold and push lower. So I'm watching this level, this 50% retracement on the Euro USD going into this week. And again, that is from the confirmation of the Edge Finders bias here. I'll pull up the chart just so you can see this really quick. We have the strong sell overall for the Euro, which is reporting a lot of economic bias to the downside. And again, if you're trying to learn fundamentals, if you're interested in learning fundamentals, as we talk about them on the channel very often, the Edge Finder is always a good place to start. And if you already have it, just read this section down here sometime, and it'll explain the fundamental analysis that we do using the Edge Finder. So again, what I like is a 50% retracement that's coming into the 1.0708 mark, and that may actually be an opportunity to look to get short. Now, if I'm getting short, where do we have to consider getting out? Well, it depends how you like to trade, but for me, something like this above that 61.8 gives me a reasonable risk to reward. That's about a 40 pip stop loss, giving a little bit of leeway in case the price wants to jump around a little bit, with the push back down to the low, giving us a 2-to-1, even better than 2-to-1, just by a bit. But even further, I'm not necessarily looking just for a, one of these moves. I know a lot of traders like to just trade the retest back down to the extreme, which I don't necessarily think there's anything wrong with that. If that's your style, if you like to do that, I understand that this is very often a point at which traders will take profits or even take partial profits. But for me, what I like to do is I like to trail stops. So let's say that price were to come up to this 50% level and hold, right? And we start putting in a series of lower highs. What I like to do is I like to take this initial stop loss and pull it up, or I guess in this case, pull it down, and trail the market behind its lower highs, that sort of thing, until the market finally decides to break back the other way, right? So I'm trailing, and then this gets stopped out here. So of course, this is a really great trade scenario. This doesn't happen to me very often, but that is what I'm aiming to do with each one of my trades. I'm trying to capture a really nice runner. And so when I set up these ideas, I don't know exactly how the market's going to play out, and that's why I try and sort of use trailing stops to my advantage, because I don't know exactly what the future holds. I'm trying to react to what the market gives me. So what you can see here is if you watch my videos often enough, I'm giving you my full strategy without any holding back. I build a bias based on the technical chart as well as the Edge Finder's economic data bias, as well as the COT and retail sentiment, right? And seasonality. I'm looking at those things, and then I'm building a entry, and then I'm trailing stops. So my whole strategy, if you watch my video long enough, you will understand exactly how I trade. There is not, any sort of secret trapdoors where I don't tell you guys something. I mean, this is literally what I do. So, yeah, so let's keep going. There's several on that list I wanted to show to you guys, and we can keep going through it here. EURUSD was one that I just talked about. We could talk about also NZDUSD very quickly. So the NZDUSD currency pair, let's start fresh here. And here we go. So we had this level. This is a pretty clear one, right? This level right here, support, 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 support. Could it hold it long enough, or it held it for a while, but it couldn't hold long enough to get it past, and then dropped like crazy here on the retest, even holding as a strong area for sellers, right? So as we go into this week for the NZD bulls, I'm sorry, for the bears, if we draw fibs from here to here, again, we get another 50% retracement. Now, how do you play this? Nick, if both of these are likely to move up at the same time, euro dollar and NZDUSD, which one do we take? Well, you have options, and that's up to you. And of course, I'm not here to tell you what to do with your trading account. Please make that distinction very clear. I'm not a financial advisor. I'm just sharing my thoughts here. If I was to look at it, which one would I take? Well, I'm interested in both, but I think I would pick the euro. And part of that is because it offers a positive swap to the downside if you hold it short, but also because the euro is just, it's a pair I'm a little bit more comfortable trading. Anyways, as price pulls up, let's do the same analysis. Stop loss in this case looks so similar, right? You could even go the 40 pip looks exactly the same. I mean, these two trades look identical. Now, some traders may look to use NZDUSD as this thing is more volatile, right? So if this thing gets extreme, it could drop even faster than the euro in some cases. So it's something to think about. But again, very, very similar concept there on NZDUSD. Now, I have a surprise one that a lot of traders have not been seeing me talk about recently, which is Oh, well, actually, it fell off the list. I was going to talk about gold here. I'll still pull it up just to show you guys. Gold is technically now in the neutral category, but keep an eye on this one, as this one has a -2 score. It was poking its head into a sell reading last week. As price pulled back, I thought, hey, this thing looks pretty sell heavy. And I was watching it. So if price hovers back into, if the reading here hovers back into a -3 or lower, I'll look to get potentially short on the gold chart here, as a price retest of this 50% retracement looks really interesting to me. So yeah. By the way, you guys, there is a way, I'm sure you guys may, if you don't already have the Edge Finder, you may want to try it. You may want to check it out for yourself. We do have a free version now available. The link will be down below in the description. The free version is very limited, but it's a way to try out the software. And if you do actually already have the free version, or you would like to just go ahead and upgrade and get the premium version, we do have a sale going on. Use code YTVIP down below in the description. Plug that code in at your checkout, and you'll be able to get access to the Edge Finder for a discounted rate. Yeah, we have a lot of people using the software. It's a campaign that we're on to build the best tool possible for traders. And again, all of that information is down below in the description if you want to take advantage of that. NZDUSD, Pound USD is another one we could go over. GBPUSD here, we could pull this one up, and let's talk about the pound. The pound had an extreme. Oh, look at this. Pound has a -9, and Aussie dollar, we're gonna have to take a look at that, at a -10, getting basically every category to point towards a sell. Here's your GBPUSD reading, and you can see on almost every category, the only one we're missing is retail sentiment. We have bias to the downside, and what we can see here is, for example, if we go through this really quick, when we talk about institutional data, this is smart money positioning. Smart money is long dollar and short GBP. Retail sentiment is mixed, but mostly the crowd is just slightly biased towards shorting, which is of course not necessarily the best thing in our case, but it's pretty 50-50, so it's not a strong factor there. Seasonality is of course an interesting one. So seasonality is the idea that in the month of February and in March, both of these months are expected to, historically speaking, be negative for the GBP-USD currency pair. So that's going to get us a minus in that category. Trend, we have a downward trend, and that's pretty clear. GDP growth, inflation, unemployment, and interest rates in all four categories. Bias is favoring the dollar. So GDP growth is lower, is more in the US. Inflation is healthier in the US. Unemployment is healthier in the US. Interest rates are more attractive in the US. So we have a strong bias to sell the pound USD here, at least according to the Edge Finder. So that doesn't necessarily mean I'm just going to go short it right here. That's not what the Edge Finder is telling me. The Edge Finder is just giving me conditions, and now I'm going to go look at the chart. I'm going to go look at setups and see what I can find. So this pound USD move, pulling back, honestly, if you're very short biased on the pound USD, there may be a couple scenarios that look attractive here, but the main two that stick out to me are going to be this shelf where we completely fell off, right? A retest into that area would be a sell, but even more aggressively might be just looking to sell into this rally here. This 38.2% lines up nicely with a support zone that had been broken and even retested there. So from a technical perspective, this offers, in my view, two scenarios to short the pound USD. And again, this is a lot of setups going into the week. We don't usually get this many ideas at once, but we're all, I'm all for it. It's always great when you have plenty of ideas flowing. You can really pick the best ones that you like. This pound USD, again, pulling into this 38.2%. If I'm looking at this, I'm saying a stop loss above that 50. And you might say, well, Nick, why don't put stop loss above the 61.8? I think that there's a case here for two scenarios to get short pound USD. And when I say that, what I mean is that maybe scenario one doesn't work out and we have scenario two to fall back on, but maybe scenario one just works out great and I don't want to miss the idea, right? The idea here looks still favorable at the 38.2% retracement in my view. But if this thing spikes higher and we just get stopped out on the first trade, there may be a second chance move that comes in on the pound USD. And hey, let's be completely transparent. There's the possibility that both of them don't work. And if they both don't work, here's a thing that traders need to remember. This is not risking 10% of the trade. This is not what we're doing, right? Many traders are going to do that on their small accounts. They'll risk ginormous amounts. And then when they have a losing streak and blow everything, they'll wonder why things are not working out, right? We're going to risk really small. you know, in our trades. That's how I'm going to be looking at this, right? So price comes up into this area. I'm going to be risking a really small amount of money, or at least a really small percentage of the move if the price goes against me, right? Using a small lot size. I'm not going to gamble the whole account on this one move, right? The idea is risk small so that you can survive when things go terribly wrong, because they're going to. That's the thing about trading. They're going to go terribly wrong. Trading is going to go terribly wrong for you at some point or the other. It's not a question of when, or not a question of if, it's a question of when. And so if you know it's going to happen, you have to manage your risk properly. You have to have small positions on so that you can stomach and handle the losing streaks that are inevitable. Anyways, that's a whole nother tangent, whole nother video. Again, you guys know my concept with trying to trail stops. As long as we are putting in lower highs, I'll be trailing a stop if this move were to go in my favor, right? So I do like pound USD on the short side. And again, the Edge Finder gives us that nice confirmation. If I take any of these trades, you guys will see them inside of our Discord channel. If you're not already in our Discord channel, let me show you that. Okay, so this is what our Discord looks like. Inside of the Discord, we share all of our trading signals, and more importantly than just our trading signals, we share the explanations as to why we take each trade. So for example, here's like a USDJPY trade. I had 2 different entries on this one, and you can see with each trade, I share the full breakdown, the full write-up analysis before, before I'm just sending out just this. I'm writing up why I'm taking the trade, the full breakdown behind it, et cetera, et cetera. So if that's something you think would be helpful to you, if you'd like to read along with the trades that I'm taking and see why I'm taking them, et cetera, as well as our other top traders, Frank and Ivan, you guys might have seen them on my live streams. They come on very regularly. We also have chat rooms available, educational material. We do coaching calls where you can jump in and learn with Ivan. He does live room calls several times a week, all sorts of good stuff. If you're not already in here, then come join the action. And again, all of that, whoops, my whole screen blew up. 1 second. Sorry about that. So if you're, like I said, if you're interested in joining that, the link will be down below in the description. And there is also that same promo code that we mentioned earlier for the Edge Finder. It is also available for the VIP group if that is something you think would be helpful to you. And you can actually get both of them if that's also something you're interested in. The last one I want to talk about is USDJPY. And the dollar yen is one that I am actually looking myself to get long on this week. I'm sorry, actually, I already have a long position open on USDJPY. What I'm looking at is possibly more than one attempt on the dollar yen. So when I say that, I have a long trade in this area. I am already long USDJPY. I'm not logged in. I should have been logged in. As price pulled back, I decided I'm going to pick it up here. My first trade is here. It is slightly in the red. My second idea is down in this area here. Both of them on the long side, both of them looking for a continuation push on this upward trend. If it doesn't work out, again, the idea is, remember, stop losses in place, small risk, and realizing that I might need to take a second entry. And if that second entry doesn't work, again, no problem. Both of them are small trades overall. I'm trailing this stop if it makes a move. So if price does decide to get bullish here, if the dollar stays strong and we get that push, a move back to the high will prompt me to trail that stop loss into profit and see if I can capture a bit of a bigger runner. But again, I really like the dollar against the Japanese yen on the long side. That's a trade that I'll be paying attention to myself going into this week. So yeah, and for those of you guys who do want to talk about gold, I know I mentioned it briefly earlier, but I still have a bearish bias on this one. It still looks very, very weak. And if it pokes up on the Edge Finder again, I may look to get on the short side of that one, like I had mentioned. So just a quick look also at the Edge Finder. We have some interesting information. In terms of retail sentiment, you've got a very heavily long set of assets on the Swiss pairs, which is very interesting. Dollar Swiss, NZD Swiss, Aussie Swiss, CAD Swiss. Kind of interesting that all of that data is showing that these pairs are the most heavily bought of the list. And when we go look at NZDCHF, it might be telling as to why. NZDCHF has dropped off an absolute cliff, and retail traders have just been buying it like crazy, and unfortunately probably getting stopped out and losing a lot of money along the way. We flip it around, we take a look at the most top short assets. We've got Swiss yen, UK 100, USD ZAR, Euro yen, German 30, dollar CAD. Interesting stuff there. And dollar CAD specifically comes to mind because I know I had looked at it. Dollar CAD has been pretty bullish, and this is the common retail trader theme. It's unfortunate, but most of the time when markets are moving like this, retail traders are trying to bet against a move like this, and as it just continues going higher, they get caught in further and further pain and trouble for their actions. So something to pay attention to. We also just added the seasonality chart, which is really interesting. A lot of people wondering about like the stock market, for example, is it going to get a bigger run to the upside? And I want to show you this SPX 500 chart I was looking at the other day. To be fair, February, the 5-year average is not looking great, whereas the 10-year average is just slightly positive. 5-year, again, same kind of concept. We're seeing overall a negative expectancy on the S&P 500 there. But then when we look at the NASDAQ, let me see if I can find NASDAQ for my indices traders, it's very similar. You can see kind of a similar performance overall there. We could also take a look at things like GJ to get an idea month to month historically. So pound yen, for example, has a historically positive month in the last 5 years. In the last 10 years, it's slightly negative. What I like to have both of these lines on here. We added the 10-year and 5-year average. For those of you guys who are Edge Finder users, just head over to the seasonality chart and you can try this one out and play it with it for yourself. But yeah, cool little addition that we've been working on. And then finally, the risk on, risk off gauge. Here's a quick look at that. What we can see here is that this is basically showing us the expected or sort of risk on versus risk off. Right now, the market's very confusing, right? It's kind of got mixed sentiment. You had the stock market running up. You also had the dollar running up. So we're getting this this bias here based on all this stuff. You can pause the video if you'd like to read through this, or you can just head over to this page yourself. It's available even on the free Edge Finder, so check it out for yourself. But yeah, thank you guys for watching. That's going to be everything for me going into this week. I hope you guys have a great trading week. Trade safe, and we'll see you back in the next video. See ya.